What's up guys? In this video, I wanted to show you how to easily estimate the APR of a liquidity pool. This is important because we want to really know our risk and reward when we're yield farming, right? Because some pairs do have potential to increase a lot in price, but the APR is really low. So then we really want to avoid yield farming those tokens, especially if the pair is very volatile. So if you're struggling to estimate the APR of your pool, then this video was made for you. If you're new here, my name is Richard. I'm a yield farmer and investor, and this is what this channel is mainly about. You can see here I have a pretty good track record when it comes to yield farming, sitting in really nice Ethereum profit, roughly 7.57 ETH on my main wallet here. Most positions have been able to be in profit. And I like to use Ethereum to measure my progress because a lot of these pairs are using Ethereum as a quote asset, right? That's what a lot of these tokens are being priced on because there are times where I would suffer an Ethereum loss, but I would be in a US dollar profit here. So I want to avoid that as much as possible because if I started investing using Ethereum, I would be down right now, right? And also because this means that I would have been better off just buying Ethereum and not yield farm this pair at my particular entry. So not ideal, but oftentimes my positions do sit in a loss when it trades below my entry for a long time before it reverses to the upside. And then my exited position is sitting at 8.6 ETH. So pretty good results overall, consistently beating impermanent loss here. I run a wide range strategy most of the time, so impermanent loss is not that hard to beat. So let's dive right in. The first way to estimate an APR is simply using the average volume to help determine our fees compared to its liquidity. So what I can do here, if I pull up a chart on different platforms, you can use Dex Screener instead of Gecko Terminal as well. I like to use Gecko Terminal, but what I want to do here is turn on this volume indicator. It's usually on by default, but if you see here, I have this blue line, which is the average volume. I want to go into settings and then hit the style button. Make sure this volume moving average is on. What it does is it takes an average volume of the previous volume, and you can change the length as well. I'd like to just keep it at 20, but you could use like 30 days or 60 days as well. So if we're on the daily chart, it takes the 20-day average volume, right? So that's a very easy way to find the average volume in a particular pool. And if you want to find out the US dollar volume, we want to stick to US dollar. If I click this Ethereum here, you can see this average volume becomes in Ethereum terms. Since the liquidity is priced in US dollar, I want to look at US dollar here. So for this specific pool of Bonk and ETH on Ethereum mainnet, you can see the average volume is roughly 78K, 79K over the last 20 days, right? And its liquidity is sitting at roughly 158K. So if I want to easily estimate that, what I can do is take the average volume here at 78K, multiply that by the fee tier. In this case, it's 1%. We can scroll down here if you're on Gecko Terminal, and it should show you this fee tier right here. Sometimes other chains like Solana does not show this, so you do have to go to the DEX itself to find out the fee tier. So what I want to do is calculate the amount of fee I would earn in a day. So multiply that by 0.01 because the fee tier is 1%, right? If there's $78,000 worth of volume, this is the amount of fees per day that is going to be distributed to this 158K here. And since APR is an annual metric, right? It's over a span of a year. I want to multiply that by 365. So 284K over the span of 1 year, which is really good here. If you see the APR is higher than the liquidity. And so I could divide that number by liquidity, which is roughly 158K. Let's use 159, just round up. So over the span of 1 year, this pool actually generates roughly 179% APR. So really solid pool here. But if you guys are running a wide range strategy like I am, oftentimes the APR is not going to be this high, right? Because those tighter range strategy would be able to concentrate their liquidity and earn a higher APR than we do. but in doing so, they're taking a ton of risk. You guys can check out other videos on my channel that talks about like wide range versus tight range. I talk about it pretty often, but I personally prefer a wider range strategy, especially because I have a more diversified portfolio and not just 1 to 2 pairs that I yield farm with. So you can see here 179 APR, but what I want to do is actually apply a discount to that because my actual APR would be less, right? And depending on how tight my ranges run, the discount could be more or less. But generally, I like to cut the APR by at least 1/3 if I run a pretty wide range strategy here in this case. So I could take that 1.79, multiply that by 0.33 if we're cutting it by 1/3, right? Then I would get an average APR of roughly 59%. So that's a great estimate here. And we could use like different trackers and apps to see if it's kind of in line with our expectation. And what I could also do is get another more conservative estimate at, let's say, 1.79, multiply that by 0.25 here. So if I cut it by 75%, you can see my APR would be still at 45%. So in a wide range strategy, 45 to 60% APR is pretty great here for this pool. That's why I'm currently yield farming this pair. And my APR would spike up as well if we see like a huge run up here, right? You can see the average volume in this case jumps up to like 300K, 500K here. So my APR could definitely break like over 100% if we see like this previous run up here kind of retraces a little bit, maybe consolidates here, and then there's another big move up. I would be able to print a large amount of money, especially since I have a wider range LP, right? The tight range LP might earn a lot of fees right now, but when the big moves happen where there's a ton of volume, it would probably miss this move, right? If I hop to this LP here, you can see this bonk and ETH pool. So based on the Ethereum terms, it's generating a roughly 67% APR. But on the dollar terms, it's roughly 57% APR. So pretty close to what I was expecting, roughly 40 to 60% APR. And it's good enough to get a rough estimate in my opinion, because there's just too many factors at play when you guys are trying to estimate the APR. For example, if you look here, there's a ton of tight range liquidity in this zone, right? If the prices just stay in this zone for a long time, my APR is going to be very low here, like you see here, because people were squeezing the range. They were having this high concentration LP here, and then my APR would drop pretty significantly. But then when the volatility returns, that's when I could print a lot of money, right? You could see this big move here back in April. The highest peak was like $200 something in one day, right? And very recently, $169 in one single day based on an $18,000 LP. So almost 1% return in one day when the big moves in the market does happen. So a lot of times if we provide wider range liquidity, we do want to stay in range for a long time because those high APR days do come, and then that's when we make a ton of money, especially if the pair just goes back and forth. These tight range LP might keep range chasing, right? They rebalance down, and then when the prices pop back up again, there's a few days where I could make a lot of money. They try to rebalance up again to catch the range, and then it drops back down again. So my strategy would then suffer like no impermanent loss or very little impermanent loss while earning a ton of fees, right? You can see here, divergence loss, only $200 something. I'm outperforming holding in the market by $2,000 something. So that's the first way. And another way we could estimate our APR is by simply using the revert backtester. So if I use it for this bonk and ETH pool here, you can see this is the min and the max range. I could backtest this right now. What I want to do is click this create position tab. And then in this case, it's Ethereum and bonk. Sometimes it doesn't pull up the token. So what I want to do is hop back to Gecko terminal here, copy the address of the token, go back here, paste it, and here it shows up. So in this case, I'm in this pool, right, 1%. And then if I hop back to my LP position, you can see the max range is roughly 0. And then 7 zeros and then a 2 and then 0.8 8 zeros and 2 9, right? So we could simulate that here, 0.0000 8 zeros, 2 9 0, and then 7 0 on this side, and then a 2 on this side. So you can see very wide ranges, and I would stay in range for a very long time. So if I put 1 ETH for this simulation, I could run the backtester here. So since I invested Ethereum into an Ethereum-based pool, I don't really want to figure out the APR in US dollar terms. I could do that as well, but what I personally prefer is to look at the ETH gains. So here over the last 30 days, I would have generated a roughly 0.044 Ethereum in fees. So 0.044, analyze that by multiplying by 12 because this is the fee in 1 month, right? So here the estimate is roughly 52.8% APR. So pretty accurate here in my opinion. The backtester is the most accurate way I've found to actually estimate the APR. But the downside with this backtester is that it only supports these chains when you guys are yield farming, right? And a lot of times it doesn't work on Base. There's something wrong with their data or something. But for these other chains, I find that it works fine if you want a more accurate estimate. But in my opinion, the APR estimate could just be very rough because you're never really going to know unless you've been in the pool for quite a while. For this pool here, the volume is pretty decently consistent. Sometimes the volume does drop lower here. We can keep an eye on this blue number. So when it's back here, the average volume is only at roughly 30 to 40K. So I could also expect my APR to cut down by half, right? And you can see very recently here, there was lower volume and again, higher concentration like I was talking about. That's why the fees were less. But the periods that I entered the pool here, the average volume was high. And then very recently, the average volume is high as well. But over time, this pair does have decent volume. That's why I'm yield farming this. And again, you guys could hop into this pool if you want. If you're bullish on these two assets, don't just copy whatever I'm yield farming, right? Because sometimes I just exit the pool when I think it's a good time to exit. And then you guys might hold on too long and then suffer a loss afterwards. And always do your own research. None of my videos are meant to be financial advice. So do decide for yourself and take ownership of your own investment. And I want to show you guys another way you can estimate your APR. And if you guys have been in range for quite a while now, and you want to figure out how much fees of the APR you've actually earned, you can use apps like Revert here. But sometimes you guys are yield farming on chains like Solana or even Sui and smaller L1s that Revert might not support. So then we could use different apps like, for example, Crystal here. They do support a bit more chains here. You can see Berachain, Sonic, Solana. So Crystal is a pretty good app here to use. What I want to do is hop onto a random pool. Let's just use Bonk again for this example. And again, this is supported by Revert, but you could apply this to a Solana pool, right? To track the APR. And what I want to do in this case is take the total fees and rewards that I've earned so far and analyze it. So this is particularly good if you've been in range for at least 7 days, but ideally over a month. So then you could get a more accurate APR estimate. So what I want to do here is take a look at the date. So I entered into this pool at April 4th of this year, and today is July 12th. So what I want to do here is go to this time and date site. This dates calculator would be able to calculate the date for me very clearly. So April 4th here, 2025, and then July 12th, 2025. After I hit calculate, it would show this 99 days, right? I've earned this amount of money from this LP. So pretty great here. So what I want to do is take this 2822. If we divide that by 99, this is my daily earning, right? $28.5 here. And then if I want to analyze that, I multiply that by 365. So $10,404. And what I could then do is divide this by this current liquidity, 10404 divided by 18280. So 57% APR, which is what Revert is showing here. So Revert does the same process automatically for you. That's why you see a very similar number. But again, I showed you guys this because there are going to be cases where you're yield farming different chains that you have to keep track like the fees manually. So that's how you could basically calculate your APR. And if you guys are really unsure and you want to just do a test LP, you can do that as well. Just run the test for like a week and then analyze your APR to see the actual APR and see if it's worth it to yield farm that pair. But again, my favorite method is just to use the average volume here and then try to figure out like the rough APR. We don't have to be like really pinpoint accurate about it. We just want to get a rough estimate to see if it's actually worth our time. So I could run another example here with, let's say, MOG and ETH here. So if you guys look at my LP here, MOG and ETH, it's currently on base that I'm providing liquidity for. The HODL APR is roughly 61%, and I could compare that to the rough estimate. So 15413 is the average volume that we're getting. Multiply that by the 1% fee tier here. So it should be $154 a day. Multiply that by 365. So that's the annual APR divided by the current liquidity of 137,420. So you can see 40% APR is much less than my actual APR, right? And we could try to find the pool on Uniswap here and figure out why. So what I want to do is take this pool address here and then search it on Uniswap. Make sure I have this pools tab on and then click here. And the reason why I use Uniswap is because the data doesn't show on Revert. I want to change this chart to liquidity. So the APR has been pretty good because the liquidity is not that concentrated compared to the bonk pool that we saw, right? So even with a lower average volume here, I was able to generate a pretty good APR, but it could also be because the previous days had pretty low volume until like the last 2 days here. So it could be that the average volume in this case is not the best indicator, because if we do zoom back, this pair does have like a history of higher volume. Maybe the average I should be using is roughly this 23K mark, right? Let's say 20K. So 20,000, multiply that by 0.01, multiply 365, and then divided by current liquidity, 137,420. So 53% APR on this. And because the concentration is not that high, I don't have to apply like the discount rate to this LP, right? So the discount rate that I apply initially to bonk also depends on the liquidity concentration, right? This LP just happened to have less concentration than other pools. That's why we see a little bit of a lower volume and higher APR in this case. But for most cases, I want to cut this APR by at least half or 1/3 or even 1/4 in some cases where there's a lot of concentration. And one last way that you guys can use to estimate the APR is to use the Metrics Finance Pro app. You can see the tracking here. In my opinion, sometimes it's good, but sometimes it's not. So we do need to bounce around different tools here. But if I hit simulate pool, you would be able to see that with my current LP, it's saying that I would be generating 200 something percent APR based on this current price, right? If I hit custom price here and move it around a little bit, so if I move it down, you can see that's the APR where the liquidity concentration is really low. But if I move it to like the peak of concentration here, you can see the APR drops sharply to 21%. So is it actually 200% or is it 21%? Or if I move it a little bit here, maybe it's 36%. So with a graph like this, it's very hard to actually estimate the APR, especially because the pair sometimes is not volatile, and then sometimes it's very volatile, right? Over the span of, let's say, 99 days that I was yield farming, again, the average volume is like pretty much the same. So the APR is still at 35%. So I can't really get like a really good accurate APR here. But at least I could get like a roughly the worst case APR where the concentration is higher around this range, not at the peak, because this super tight range LP gets knocked around all the time. So the APR is not that relevant. So my base case for this LP might be at least 35% APR. If I'm happy, I could hop into this pool Knowing that, I would probably generate more than 35%, right? But metrics is probably better for a pool that has a more even distribution. So let me try to find something on my wallet here. So let's just say we're using this MOG LP that we were looking at, and then we click details, and then I could hit simulate. And again, this is like the pro plan where you have to pay a monthly fee. It could be worth it, but it's definitely not necessary. I haven't been using metrics that much recently, so it's definitely not necessary, but it's still a nice tool to have if you can afford it. So here we could see Morgan ETH pool here. The LP concentration is not too bad compared to the bonk pool that we saw because my range is just barely wider than what a lot of people set, right? So at this current price based on the last 30 days, the APR is 37%, but I've actually been in range in this pool for 138 days. So let's change that time frame to 138, and you can see the APR is roughly 43% based on the current concentration. If I hit custom price here and I move it up and down a little bit, you can still see 40 something percent. And let's say to the top side. So where the concentration is the highest, that's my worst case scenario. So 26% APR at its lowest, and then 40 something percent APR when the LP is in this concentration range, right? But again, no tool is perfect. If we actually look at revert, my actual APR is 61%, but still I could hop into this pool knowing that like my worst case scenario, if I move the concentration to be the highest, it's roughly 26% APR, right? So if I'm happy with this APR, I could still hop into this pool. And again, backtester tool is the most accurate in my opinion when it comes to estimating an APR, but it doesn't work sometimes for base. That's why I don't use it for base. But for mainnet and different chains like Arbitrum, the backtesting tool is really great. So I hope you guys found that useful. And the reason why we want to estimate APR again is to make sure that it's worth it to yield farm, right? When we yield farm, we are taking on a bit more risk, stuff like impermanent loss, where our tokens are being swapped from like one to another. So if one token doesn't do well, then your whole LP and your portfolio is not going to do well as well. But if both tokens do well, then your portfolio would do really well because those two tokens would appreciate in price. And then you get an APR on top of all of that, right? That's why yield farming is really great. But we really want to avoid pools that have a low APR so that we're not taking unnecessary risks, right? And if you guys want to learn more about yield farming, I have a ton of other videos on my channel that talks about yield farming and investing. So be sure to check those out. Thanks for watching. I'll catch you guys next time.